This is a daily chart of the current Nasdaq. You can see that it made a low here on October 13th of 10,088. Kind of retested a couple times. This one came, within 100 points or so. That's close enough for a retest for me, for my intents and purposes here. I just want to say that the Nasdaq has been in business. They opened their doors February 8th, 1971, and it's only traded below this black line, the 200 simple moving average, 2 times longer than this current time, which started on January 18th. So it's going on 53 weeks. And it did this in 1973, 75 bear market. It was below the 200 simple moving average for 15 months. And again, in 2000, 2001, it was below for 15 months. So it's been more than 12 months, going on 13 months here. And we know from history will tell us that at some point it's going to trade through this black line. At some point, it's a downtrending line. So it's, even if it stayed here at 11,140, it would eventually cross over it because this is a downtrending line. But what I'm seeing here is since the start of January 2023, we're starting to see institutions come into the market. How do I know? Because these blue volume bars are telling me so. On the up days, are having a stronger volume, and the down days, lighter volume. Friday was essentially another follow-through day, as we had a 2.6% gain on a strong volume there. You could see that. And it's traded through its 50, and it's 3.7% below its 200 simple moving average. I'm going to go back to 1975. And no two bear markets are alike, but they do all end the same in that they trade through their 200 simple moving average. I'm using MarketSmith daily, day-by-day advanced chart, and you can see that it made this low here and then kind of retested it. I mean, it was when, 3 points here at 54, and it came down to 57. So that's a good enough retest for me. Anyway, on December 31st, 1974, so we had a Santa Claus rally here, follow-through day, and 1.7% with stronger volume. You could see these big blue volume bars. And after, this was a long period of time, like I said, 15 months in this bear market, people thought, that this market would never go higher. There's bad news, inflation, blah, 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 gas crisis, hostage in Iran. There's all sorts of crap going on. But it doesn't matter because, as our friend Brian Shannon says, we just follow the price. Turn on some soft jazz music, tune out the news, and just watch the price action. And you could see as the month of January went along, you'd see these big blue volume bars coming in, and they're essentially another follow-through day. This is up 2.12% with stronger volume. There's another day here, 1.38% on the 27th. It was up 2.54%. You could see the volume coming in, and you could see the market starting to get in a power trend here, where this green line, the 10 and the 21, are trending above the 50. And as I click further along, I believe it's Valentine's Day, or the day before Valentine's Day. Yeah, the 13th here. It was up 1.8% with stronger volume, and we'll go through. And so what we're seeing, higher lows, right? We see the higher lows here as it made this low, and it's starting to make higher lows as it gets into this power trend. But also we need to see a higher high above this number right here, because the higher lows is great, but you got to make higher highs. It's 66.89 at that time. Yeah, 66 doesn't seem like much, but all we want is higher highs. And on the day before, what day was this, 27th? Yeah, it closed at 67. So it started making higher highs before it got above the 200. And then, when you want to see it take out the 74, 77 here and just make higher highs. Come on, Marty, get it together. And it started doing that after the Valentine's Day, February 14th. And you can see the big blue volume bars coming in, and it's starting to make higher highs here. And so then we're out of the woods, making higher highs. We're starting a new uptrend, and there's a lot of leading stocks breaking out, and showing well. And you could see this power trend here with the 10, the 21, and the 50. So now let's go back to our current Nasdaq and take a look and see if we can see some similarities. Like I say, no two bear markets are the same, but you can definitely see the retest here, the low and the retest, a couple of retests actually. And now we had the Santa Claus rally, right? As soon as January hit, this thing changed characters. We're starting to see it in the market internals. You're starting to see follow through days pile up. We're seeing the it's still, like I said, it's below the 200. So we need to see it rally through the 200. But what it is doing is it's making higher lows. And it just made one last week. I thought that bar on Wednesday was going to cause a sell-off, but my expectations were broke on Fridays. This thing just ripped higher, 2 point something%. So what I'm looking for is this index to rally through the 200. I need it to make a new high above 11,571, which will take it through the 200. And we'll get into a power trend. Now, I'm not making any predictions. It could definitely go up to the 200 and fall apart. It could sell off, back down to 10,000. It could, but history tells us that at some point it's going to rally through this 200 simple moving average. I mean, I think it's got enough history, 52 years of history tells us it's going to do that at some point. So just hang in there. I mean, I'm not all gas, no brakes until it starts making new highs above the 200 like it did in 1975. Anyway, that's my bear market thesis. You got to always allow the markets to prove themselves. So far, this has not proven anything. Why? Because it hasn't been able to make a new high. And once it does that and gets above the 200, then yeah, I'm all gas, no brakes. But right now, I'm still going to proceed with a little bit of caution because you have to practice risk management in this business. Anyway, that's my thesis from 1975 and in comparison to today's market, and we never give up.